In today's economy, businesses can't afford to have too many problems. One problem that I see many of them have is the lack of a buy-sell agreement, and this can create very serious problems. Let me give you three examples. 1. They wake up one day and find that they have a complete new business partner. Their business partner has passed away or been diagnosed with a terminal illness. 2. The business owner wants to retire and they need to buy his or her interest. 3. Insufficient cash flow to buy out the partner and continue to operate the business. With all these distractions, we can lose our focus and take our eye off the ball in the running of the business because we can't see the forest for the trees. Is this how you feel some days in your business? Confused, bewildered. There is a real correlation between how you feel and see things to that of a monkey. A buy-sell agreement to your business is as complicated as the monkey learning to kick a ball. It's only when the operations and benefits are demonstrated to you that you'll understand the need for it within your business. The general rule is that if you have one or more owners of the business, you need a buy-sell agreement. Doesn't matter if you are in business with your family members, partnership, company, you all need a buy-sell agreement. If more than any one person has any ownership interest in a business, you absolutely need a buy-sell agreement. The major benefits to your business is that all your business entities are housed under the same roof. Quite often, businesses in the past have adopted a buy-sell agreement that only does part of the job and does not encompass all the entities under the one roof, and with one insurance policy per life insured, hence the term the Complete Business Succession Plan. The Complete Business Succession Plan is unique in that it provides flexibility, ability to change and add entities over time, tax-effective distribution of insurance payout. Your health is underwritten once. One policy strategy covers business equity, debt and personal components, cost savings, fees, volume discounts and premiums based on the size of your premium. How and where do we start? This is not a process where you download a form from the internet. This is a very complex and complicated process that requires a lot of thought, a lot of planning and integration with your estate planning, and the help of a professional financial planner who specialises in buy-sell agreements, one that can apply the Complete Business Succession Plan. To set up a Complete Business Succession Plan, you'll need to engage several parties. 1. SD Life Insurance and Wealth Advice, buy-sell agreement specialists. 2. Our specialist consultant succession plan lawyer with the Alpha strategy. And 3. Your accountant. Issues that need to be addressed before setting up such an agreement are the following. 1. Valuation of the business. 2. Full disclosure of debts. 3. Full disclosure of assets. And 4. Release of guarantees. SD Life Wealth wear many hats. They've been in the financial services sector for almost 20 years. Their skills and knowledge will guide you along the path to provide a smooth and thorough experience through the process. SD Life Wealth, qualified financial planners, business succession planning specialists, extensive knowledge of corporate business structures, lending strategist, strong knowledge of balance sheet debt, extensive approved product list. SD Life Wealth completes a thorough needs analysis for business and individuals and partners, deliberates and strategises with client and specialist succession lawyer to determine the trust structure, compares existing cover with open market, arranges medical for pre-vetting for insurance placement, organises placement of insurance policy. The Alpha strategy. Our leading succession planning lawyer has developed and patented a unique business succession plan and consults widely across Australia. Business Insurance Trust Agreement was developed in 1987. This is a unique structure that allows business people and high net worth individuals to deal with business, personal and self-managed superannuation insurance needs on one insurance policy. Our Business Insurance Trust Agreement is unique in that it's a complete succession plan, incorporating a buy-sell, debt and personal in the one agreement. It's been approved by the Capital Gains Tax Cell of the Australian Tax Office. That's why we call it a Complete Business Succession Plan. A business succession plan pre-agrees a strategy that will enable a business person to exit a business upon retirement or the occurrence of an insured event. The traditional approach to insurance-funded succession planning has focused primarily on the funding of the purchase price of a business person's equity in the business, a buy-sell agreement. This traditional approach often overlooks the need to extinguish personal liabilities, for example, personal guarantees and mortgages over personal property, with respect to any debt or other liabilities of the business. Business people also have personal or estate planning needs, as well as business or succession planning needs. The purchase price of their equity might only meet part of these needs. Personal cover meets the shortfall. Our business succession plan is the only complete succession plan. You can see from this slide a practical example of a complete business succession plan in action. Notice that all the entities are under the one roof. The insurance company who we've written the policy through, with feeds down to BITA, this business insurance trust agreement set up is usually in the main trading entity, and then all the other entities branch off from there. You can see from this diagram that you can have as many entities, there's no limit, and you can add more over time as your structure changes. All companies, trusts and directors should be under this structure, providing total flexibility. Adding additional entities will not affect the BITA agreement or your insurance policy in place. All we need to do is give the trust new instructions and reallocate the existing cover to incorporate the new entity. We simply do this by giving the trust new written instructions. In the event of a claim, this structure provides total flexibility to handle the insurance proceeds because the money is paid to the trust and then it can be distributed from there in the most tax-effective way. A traditional buy-sell agreement does only half the job, and it does not provide the flexibility for your structures to grow without the need to change your insurance policies to cover off debt in those entities. This is important because as you get older and your health may take a turn for the worse, then you could find yourself having exclusions on your policy or paying more for insurance. Even more importantly, a traditional buy-sell agreement does not take into account the tax-effective management of the insurance proceeds like the complete business succession plan. There is no other buy-sell agreement that offers this flexibility, and there's no other buy-sell agreement that has a strategy like this that's approved by the capital gains cell of the ATO. It's why we call this the complete business succession plan. Let's just go over those points on the slides now, as this is quite a lot of information to take in. Under the Business Insurance Trust Agreement, if your business structure changes, i.e. you add a new company, trust or self-managed super fund, we can simply add it under this same roof by giving the trust new instructions to add the new entities. This addition would not change your insurance policies that have been set up under this structure and therefore avoid further health checks, medicals and additional costs, which could arise if your health conditions have changed since taking out this policy. The benefit of this is that if you have had your policy since you were 30 and you're now 40, you may have developed some health issues which would normally increase the insurance cost or trigger an exclusion on your cover. This BITA provides flexibility to avoid this from happening. So why does my business need one? If you're in business with family members, and one partner gets sick or dies, do you want to be in business with their family? If you have a complex structure with a number of entities and debt in different entities, we can cover all this debt under a one policy strategy and house it under one roof. If your business partner gets sick or dies, how are you going to be able to pay out the debt and pay out his estate and continue running the business without this strategy? This is the most tax-effective way to receive insurance proceeds in the event of a claim, approved by the ATO. No other agreement offers this strategy. Can you see now why every business absolutely needs the complete business succession plan? There's a distinct difference between the traditional buy-sell agreement and the complete business succession plan, and I hope that the previous slides have highlighted the benefits and the differences. SD Life Insurance and Wealth Advice instructs us to carry out a full needs analysis of your business, which includes comprehensive needs analysis worksheets, full disclosure of assets and liabilities, obtain full understanding of your business structure and entities, review current insurance policies. The complete business succession plan. Control, protect, secure over your business, debts, lifestyle, health and family.